Hello, this is Mi Jun from the University of United States Stock Theory. Let's begin today's United States stock news for June 24th. Welcome once again to Mi Jun, where we consistently uphold the fundamentals of United States stock investing. Yesterday, I shared 2 videos with you starting from Monday. One of them was our regular broadcast. Today's United States stock news was watched by a total of 31,000 viewers, and I also uploaded a special broadcast, which you can see right here. If you look at the title here, I asked you to please make sure to watch this video. So far, only about 10,000 people have clicked on it. This video, I'm personally explaining how I'm going to make major changes to the operation of the MiG1 channel in the future. So if you have time, I really hope you'll watch at least this video. And after watching this video, several times more people than usual left heartfelt comments yesterday. So usually, it's hard for me to make time like I want to. I haven't been able to reply to your valuable comments, but yesterday, for the first time in a while, I invested a lot of time and showed my feelings to many of you through my replies to your precious messages. And among them, I'd like to share some of your precious comments through this broadcast. The first comment was left by someone with the username Inseon. I also had my membership expire after a year in July, so I'm really grateful for the discount. My husband will retire at 70 in 4 years, and we're putting more effort into our pension. I also started investing small amounts in my mid-60s, and it's almost doubled, so it's been fun. It's all thanks to Mijunim. The feeling of always being together feels sincere, and as a stock market beginner with Mijunim, I feel reassured. You started in your mid-60s and you've already shared the amazing news that your returns have exceeded 100%. Personally, when I read comments like this, I feel so rewarded. So, as I mentioned on the broadcast yesterday, I want to take on the new title of influencer, and comments like this warm my heart so much that I almost feel like I've really become an influencer. Thank you for leaving such a valuable comment. Now this time it's from someone with the username Sumuseujin. Back during the coronavirus disease era, I was just starting out in society and didn't even know the concept of financial technology. I only heard people say that it was easy to make money with Tesla, so I put all my savings into it and went through a really tough time. That's when I came across Teacher Mijon. I didn't know anything about terms like earnings, price-to-book ratio, or golden cross, and I couldn't read charts at all. But now I've learned step by step. My returns have exceeded 100%, and I've grown enough to save up for marriage and plan to build a happy family. Just like the chief executive officer said, money isn't everything in life, but I've realized that you can't protect the ones you love without it. You've always been diligent in uploading videos and showing growth, and even outside of stocks, you've been a great role model for beginners like me. I hope you always stay healthy and that peace fills your family and your life with Omiju. If you give another lecture in Korea, I'll bring your book and come to get your autograph. What about this person's comment? Personally, I was really touched by it. There aren't many young people on the Mijon channel, are there? So I think that's why it touched me even more deeply. I left a reply to the comment, so let's take a look. Hello, Sumusujin. Congratulations on saving up for your wedding through stock investments. That's right. Money can't buy happiness, but it's true that it gives you the power to avoid misfortune. I hope you create happy memories just for the two of you, not a wedding just to show off to others. Since you're just starting out in society and have plenty of time ahead, if you invest slowly and steadily, good days will surely come. I expressed my feelings by saying, if I ever give a lecture in Korea, I hope you'll come with your wife. Thank you for being with us. Now this time it's a message left by Park Ji-sung. Hello Miju, I always enjoy watching your videos. It's changing to an all-in-one membership, but unfortunately, since I'm preparing for a job, I don't think I'll be able to join. I've been watching for over 2 years, but I hope that at least things like Miju1 Pick's rate of return and market conditions could be made available to regular viewers. Thank you always. After reading this comment, I felt a bit touched. Hello, Ji-sung Park. Hello. If you're preparing for a job, you don't need to consider the paid membership. The Mijun Top Picks will continue to be maintained and will keep being updated. And as I mentioned in the video, the Mijun membership is a program for those who are truly serious about investing. Since you're still new to society, it's much more important at this point to leave investing to time and experience different aspects of the world. You shouldn't miss out on experiencing the more important things in life by focusing only on investing. Just by watching Mijiwon's YouTube channel, you're already helping a lot. Thank you. I just left you a comment like this. If anyone watched yesterday's video and is worried that Mijiwon topic might disappear, don't worry. That's not the case. Mijiwon topic will remain as it is. The investment information you need will continue to be provided, just like now. Just think of it as the video length getting shorter, that's all. Lastly, I'll read just one more comment. When I read this comment, I felt so sorry that it really touched my heart. Let me briefly introduce what it's about. This is a precious comment left by Imsuja. Thank you, teacher. I want to register as a Mijun member, but at the age of 77, my retirement funds are tight and I don't have much leeway, so I have nothing to say. I feel sorry and apologetic because I only listen to the broadcasts every day. Thank you to the teachers who have worked so hard. I will repay your kindness in the future. After reading this comment, I honestly didn't know what to do with myself. Hello Imsuja, why are you apologizing? If you feel that way, I actually feel sorry instead. From my perspective, it's simply a decision for my dream as an influencer without any financial worries. Thanks to your support on YouTube so far, I've been able to keep a mindset of continuous growth. If you join my YouTube broadcasts and leave comments like this, I couldn't ask for anything more. I hope we can stay together for a long time in good health and happiness, and I sincerely thank you. Besides the comments I introduced today, there were so many touching comments yesterday that moved me personally. I would like to take this opportunity to once again thank everyone who left such valuable comments. Now let's get started with today's United States stock news prepared for June 24th. Today as well, let's start by reviewing yesterday's United States stock market conditions. First, if you look at the S&P 500 map, at a glance you can see that yesterday was a bullish market. It's covered in a pleasant green, but the reason for the wave of blue is something we can see here. It's the energy sector. Most of the energy sector has dropped. Now take a look here. So, yesterday, out of the 11 S&P 500 sectors, 10 sectors surged and only one, energy, dropped by 2.53%. Now, what that means is the fact that energy dropped means energy prices fell. Crude oil prices plummeted. That suggests that regional conflicts in the Middle East are being resolved, which we can vaguely infer. And yesterday, for example, the volatility index also dropped sharply, 1850. So, as the volatility index, which we call the fear index, dropped sharply, you can see that the fear in the market has been alleviated. The fear and greed index went up to 56. As we enter the greed phase again, the market continues to stay in a really warm situation. Instead of getting overheated, it's staying lukewarm, and that's actually a very desirable phenomenon. I can confirm this once again. The same goes for the market score. Although we're in the greed phase, the important thing is that it doesn't drop from the head to the shoulders. The fact that it stays in this greed phase is actually a very desirable phenomenon. I can say this once again. Of course, even yesterday, there were far more stocks in the Mijiwon Top Picks that showed an upward trend. First, Tesla surged by 8.23%. The reason Tesla showed such a sharp upward trend is because, as I explained in yesterday's broadcast, two major positive factors overlapped. Second, Meta performed well, rising by 2.37%. Third, Palantir was up 1.91%. Fourth, Uber was up 1.74%. Broadcom up 1.51%. Advanced Micro Devices up 1.04%. Talos Energy up 1.02%. And Trade Desk rose by 0.94%. In addition, Celestica was up 0.82%. Vistra up 0.78%, TSMC up 0.39%, Nvidia up 0.22%, and B2 ended flat. The remaining 6 stocks fell slightly. Bitcoin fell 0.17%, standing at 105,260. Amazon dropped by 0.58%, Strategy by 0.68%, Alphabet by 0.87%, Credo by 1.10%, and lastly, Nextracker fell by 2.46%, performing the worst. Let's check the status of the futures index in the United States stock market. The Dow Jones is currently up by 0.75%, the S&P 500 futures are up by 0.82%, and the Nasdaq is also maintaining a sharp upward trend with a 1.09% increase. Now, there was a reason why the movement of the futures index was so positive. Last night, some very good news was reported. President Trump declared a ceasefire, so let's briefly look at the main points. President Trump declared that a ceasefire went into effect in Iran immediately after the final missile launch against Israel. Iran initially denied the ceasefire agreement, but indicated that it was willing to stop hostilities if Israel halted its attacks. So in effect, you could say that the general atmosphere was that the war was now over. However, there's a trending news story that just came up, and I think we should take a look at it. A Korean translation is available. So there's an article saying that due to the unstable ceasefire between Israel and Iran, some of the gains in stock index futures have been given back. So what this means is, as we saw earlier, the Nasdaq was showing a good trend at 1.09%, but not long ago, it was up by 1.31%. The trend has weakened a bit, and that's how we can interpret this. The reason is exactly because of this article. Israel announced that it would respond to Iran's violation of the ceasefire agreement. So now you can see that the stock index futures are giving up some of their earlier gains. President Trump announced on Monday that Israel and Iran had agreed to a temporary ceasefire, but the Israeli military said that it appears Iran has launched missiles again. Then, Israel's Defense Minister Katz stated that in response to Iran's violation of the ceasefire, he ordered the military to respond strongly with high-intensity strikes targeting the heart of Tehran. However, on the other hand, the Iranian military denies that it launched missiles at Israel. So things are still a bit unstable. But since President Trump has declared an end to the conflict, if both sides show some restraint, it seems highly likely that this will just lead to a ceasefire. That's why futures are still showing a plus 1%, and I think that's how we can understand the situation. I've recently repeated the same message several times on my broadcasts. If you look at the history of the United States stock market, whenever stock prices fell due to wars or geopolitical conflicts, it turned out to be a valuable buying opportunity. That's because the overall trend of the stock market has never changed because of a war. And it seems that the history of the United States stock market has repeated itself this time as well. Let me read you a brief comment from Mijun. Investing in stocks is betting on the future, and there is nothing that is 100% certain. Therefore, as investors, we need to understand that stock investing is a game of probabilities, and we must constantly adjust our investment strategies toward the side with higher probabilities. There is no standard that presents probabilities as accurately as the statistics of the past United States stock market. In other words, historical facts. Investing based on historical statistics is more likely to lead to rational decisions than making investment choices based on intuition or emotions. If you do that, the probability of success is usually high. As you can see in the picture below, I've posted several images here. What this shows are the periods when various wars and geopolitical conflicts occurred in the past. And then, when the stock price drops, you can see that it rebounds without fail. Like this, the United States stock market has rarely changed its trend due to war or geopolitical crises. Wars have always affected stock prices for a short period of time and have actually provided buying opportunities at lower prices. And this time was no different, so we can sum it up like that. In the end, it was a valuable opportunity for us to once again confirm that the most important factors for stock price trends are inflation, the base interest rate, and the flow of the United States economy. Some of you may have felt fear about the war this time and sold a large amount of your stocks. In my opinion, that's okay, because things like this will keep happening. So next time, if you can respond a little better, just that alone would make this a valuable lesson, and I think you should be satisfied with that. All right, like this, once again, the war did not change the trend of the United States stock market. All right, then we should talk a bit about what is the most important thing when it comes to stock prices. All right, there's actually a really good article, so let's take a look at it. On Monday, United States Treasury yields fell. However, this is not because investors are buying United States Treasuries as a safe haven due to the United States directly intervening in the Israel-Iran conflict. That's a very important point. As you can see here, Treasury yields and interest rates are falling. When Treasury yields fall, it means the price of Treasuries is going up. If the price of Treasuries is going up, it means Treasuries are becoming more popular. And usually, when Treasuries become more popular, what does that mean? Because demand for safe assets is rising, it means something bad is happening, so people are seeking safety. That's how it can be interpreted. But in the case of yesterday, you shouldn't interpret it that way. Now, let me explain what this means through this article. Tony Rodriguez, the head of bond strategy at Nuveen, appears in the article. He pointed out that geopolitical risks seem to have had only a minimal impact on the United States market so far. So what is the force driving the market right now? It's right here. He said that the biggest factor affecting interest rates was the somewhat dovish remarks made by the Federal Reserve. Michelle Bowman, a member of the Federal Reserve Board, said on Monday that if inflation remains low, she too would prefer a rate cut in July. Now this means, since her colleague, Christopher Waller, another member of the Federal Reserve Board, made similar remarks on Friday, this adds significant weight to the situation. That's how we can interpret it. So, there weren't any people expecting a rate cut in July, but now there's a growing sentiment that if things go well, we might see a rate cut even in July. That's how we can understand the current atmosphere. And if the base interest rate goes down, the market interest rates will also go down. Rodriguez said that the possibility of a rate cut by the Fed in July doesn't seem very high. According to Chicago Mercantile Exchange, FedWatch 2, what are traders' probability predictions for a 25 basis point cut? On Friday, it was only 14.5%, but now it has risen to 22.7%. Of course, that's still far below 50%, so the probability of a double rate cut actually happening in July is pretty low. However, even if it doesn't drop in July, the likelihood of a rate cut finally happening at the next Federal Open Market Committee has increased. So we can interpret this in a positive way. What about the yield on the policy-sensitive 2-year Treasury? On Monday, it fell by 7 basis points to 3.84%. The 10-year Treasury yield also dropped by 5.3 basis points, and the 30-year long-term bond yield fell by 3.1 basis points as well. So overall, as Treasury yields fell, it created an opportunity for the stock market to rally. That's how you can see it. Another expert is coming up. Brett Barker, the co-head of global rates at Trust Company of the West Group, will be joining us. Investors are facing the risk that Chairman Powell might keep high interest rates for too long, the risk that tariff costs could spread throughout the economy, and unexpected large-scale taxes and spending that could put even more pressure on low-income households already struggling. We can see that the regressive aspects of the bill are being underestimated. Now about that. Right now, there are a lot of risks in the market, but the market is running regardless. It's extremely bullish. That's how we can understand it. Against this backdrop, he predicts that the Fed will have to cut interest rates deeper than expected to support the economy. So, what he's saying right now is that there are a lot of dangers and risks. Therefore, there's a possibility that the economy could slow down, and that's why interest rates might actually fall even faster. So, if interest rates are lowered like this, I believe there's a high chance that the United States stock market will gain strength once again. Next, portfolio manager Bryce Doty from Sit Fixed Income Advisors will appear. He says that fears of inflation due to oil prices and the preference for safe assets are creating a tug of war, pulling yields in opposite directions. It's really interesting. The fear of inflation due to oil prices. So when oil prices go up, inflation rises. And when inflation rises, interest rates inevitably go up. Now, the preference for safe assets means that safe assets are popular, so interest rates can fall. So it's being pulled in both directions, but as of now, since yields are falling, you can see that the fear of inflation is subsiding. All right. The clear power and strength of the United States strongly argue that the dollar and United States Treasury bonds are safe havens. The United States appears to have more control over the Strait of Hormuz than Iran, which has helped ease concerns about oil price shocks. So, oil prices are the most important factor. As long as oil prices don't rise, the fear of inflation can actually subside. Therefore, in the current market, with international interest rates also falling, the foundation has been laid for the United States stock market to gain strength. I'll wrap up in this way. Now let me briefly show you the one-year stock chart of the S&P 500, which we haven't looked at in a while. The stock price is currently here. It's going through a slight correction. After rising, it's showing a bit of hesitation. But even so, right now, it's gathering strength, recharging its energy before another rally. That's how you can understand it. If it breaks through the 6,150 level with increased trading volume here and surpasses its all-time high, then it's highly likely that a strong upward trend will form again. That's the prediction. Now, what's important is this. You see this orange line here? This orange line is the 21-day moving average, and right now it's at 5,966. So, as long as the 21-day moving average isn't broken and the price stays above it, even if there's some consolidation, the upward trend is still valid. That's how you can understand it. Now, on the other hand, if we look at the bearish scenario, if it fails to break through here again and can't surpass the previous high and then turns downward, that means a double top pattern will form. It already turned downward here once. And if it turns down again, that's 2 times failing at the same point. If it breaks down twice at the same spot like this, there's a possibility that a downward trend could suddenly appear. And another important thing is that the 20-day moving average will be tested for support. And if the 20-day moving average is broken, there's a high possibility that it will fall all the way down to the 60-day moving average. Therefore, from an investor's perspective, the most important thing right now is to see whether it can break through the previous high or if it fails and falls below the 20-day moving average. This is what you need to pay attention to in this situation. I'll wrap up today's broadcast a bit early. The last content prepared for today is a video about United States stocks. In this video, Topney appears, and once again, Topney has reinforced Chokjipki's reputation. Recently, even when the stock market rebounded in April, it was the same. During this war period as well, he consistently presented very positive opinions, and in the end, Topney was right again. Then, at this point, it would be good to hear directly from Topney about his outlook on the United States stock market. I sincerely thank everyone who stayed with us until the end of today's broadcast. You know the special broadcast I uploaded yesterday? This is how Midjan is changing. If you have time, I hope you'll watch it at least once. Let's all keep fighting together until the day we all retire through investing in United States stocks. Have a happy day. Thank you.
The stock market is currently trading near its peak, and all sectors except energy are on the rise. In particular, consumer discretionary and consumer staples are showing strong performance. Tom Lee, the head of research at Fundstrat, is joining us. Tom, nice to have you. Today's market movement can be seen as unexpected. What are your thoughts on this? Yes?
I'm not surprised. As Arkashin said, it can be seen as a situation where people sell on rumors and buy on actual actions. The market was already tense, and since risk aversion and the rise in the volatility index were already priced in, today's reaction can actually be considered typical.
Do you think this incident could affect the year-end outlook or possibly change the passage of bills or policy priorities?
I think it has provided a basis for the market to become stronger by the end of the year. At the beginning of this year, bombing nuclear facilities was considered a black swan event, and it was expected that oil prices would rise to $120 and stocks would drop by more than 10%. However, even though the actual situation occurred, oil prices did not surge, and stocks actually went up. I think this is a sign that we could see a good trend until the end of the year. But Brian Sullivan said that strategically, it might not necessarily be the case. From my perspective, I'm watching over parenting. If parenting doesn't surge, I think the possibility of the Strait of Hormuz actually being blocked is low.
I think the impact on stocks, bonds, and the dollar depends on expectations for growth and inflation.
Core consumer price index excludes energy, and the European Central Bank also excludes housing costs. By that standard, United States consumer price index is lower than Europe's, and the European Central Bank has already cut rates. That's why. The Fed also has room to shift to a more accommodative stance around the end of the year, and this could be a positive factor for the stock market.
These days, it seems like a speculative atmosphere is creeping back in. Recently, some IPOs have received very positive responses. For example, Circle now has a market cap of about $6.12 billion, and CoreWeave has almost reached $10 billion. There's even talk that Chamath is preparing a new special purpose acquisition company. Are there any concerns about this? That's right.
There is a speculative atmosphere, but it's different from 2021. Back then, people said they couldn't buy any stocks because they were all too expensive. But now, even though company performance has improved, institutional investors are actually more cautious due to macroeconomic uncertainty.
They're keeping an eye on the speculative trend, but it's not something to be seriously worried about yet. The business world sees the current speculative
movement as an extension of the individual investors, especially the Robinhood community, who started buying during the downturn in March. At that time, institutions and high net worth individuals were selling to secure cash, but these investors actively started buying. Even now, the same group is buying stocks like Circle, but it's still hard to say that this is full-blown speculation. That's because high net worth individuals and institutional investors are still maintaining a cautious attitude.
What is the reason for your optimistic outlook? Is it because the economy is holding up, or is it due to earnings? I'm curious about the fundamental background.
The environment is gradually improving, and there is also greater visibility regarding tariffs and tax policies through 2026. It's positive because the Federal Reserve is likely to shift to a dovish stance, and inflation could also come in lower than expected. The economy may slow down somewhat, but corporate earnings are improving and there is a lot of sidelined capital, so overall I have an optimistic outlook on the market. Considering the amount of sidelined capital in the market, I believe I can be quite optimistic about the market right now.
It's important to start with a small dream, planting a hopeful future together, growing little by little every day. Is there excitement in your heart? Let go of greed. This time won't be any different. The result is just a continuation of the process, and even if a dark correction comes, I'm not afraid. I'll hold Miju's hand and become the light for the unseen tomorrow. Happy investment? Let's support each other's dreams and walk together down this beautiful downhill path. Korean subtitles by Han Hyo-jung. All of us, boldly and noisily, together until the day we decline. Thank you.